Have you ever tried to put something together without using the manual? Have you ever just tried to do it on your own? Start from scratch? It's kind of like buying a house. Sometimes people jump in, then figure out, wait a minute, I should have followed a process. One of the first steps of that process is getting pre-approved from a lender and understanding what's the actual cost of this house. What's it going to cost me annually? Doing a budget. That's what we're going to speak about today, right after this. Hello, I'm Anthony George, the home guy Waco. Every week I put together a video pertaining to the Waco area and real estate. If you like my content, please consider subscribing or hitting the bell to get notified every week when I put out new content. Today, I want to speak about the pre-approval process and budgeting for purchasing a new home. Pre-approval. What is it? Should I do it? My lender's already told me that I'm pre-qualified. What's the difference? Today I'm going to walk you through some of that process. Pre-approval for a mortgage means that you have sat down with a mortgage lender and provided them with some information. They in turn have given you a letter or a report letting you know what you would qualify for and what interest rate, that type of thing. Pre-qualification means they've done a soft pull on your credit. They kind of know ballpark where you are credit-wise, and they say you may be good to here. But they haven't taken the deep dive into your finances. The pre-approval process looks at your current situation, your income, your job, how much money you have going out to credit cards, car payments, how much money you have set aside in the bank. Can you make a down payment? Are you financially stable enough to repay this large purchase? Why is financing such an important part of the home buying process? Well, 90% of all homes sold are sold with a mortgage. So that means there are only 10% of all homes sold in the United States that are done on a cash basis or a gift basis. 90%. That means 9 out of 10 people have to go through the mortgage process. So you found the home that you love on Zillow. You've gotten a hold of a real estate agent to go out and view the home. It is exactly what you've always wanted. You go tour the home, you go through the process, you tell the agent, hey, I want to put an offer in on this house. The agent then asks, how will you be paying for the house? Cash or through a mortgage? Well, I'm going to get a mortgage. Have you been pre-approved? No. Well, I'm going to have to put you in contact with the mortgage lender. Well, how long does that take? Well, depending on your situation, it could be a couple hours, could be a few days if they have to do income verification and job verification. What does that mean? Well, when I submit an offer to purchase a home to another agent or the seller, I also send with it the pre-approval letter. That way they understand and they know where the money's coming from to purchase this home. If you don't currently have a pre-approval letter or proof of funds from a bank that says you have $300,000 sitting in this bank account to pay for this $280,000 home, they may look at another offer. And in today's market, multiple offers are being submitted on the homes because the inventory is so low. So getting a pre-approval letter is one of the smartest things that you can do when beginning the real estate process. Well, Anthony, how do I get pre-approved? Well, you sit down with a mortgage lender or a banker. You can actually do this online. Our suggestion, or my suggestion, would be to try to find someone locally to walk you through the process. It also alleviates potential problems in the closing process. If you have a local mortgage broker, mortgage lender, local bank someone you can actually physically walk into, sit down and talk with, that can guide you through the process, or you can take information to get it to them quickly. It can a lot of times speed up the process and avoid trouble later. When you do sit down with a mortgage person, you need to have a few items ready to go. Recent pay stubs, federal tax returns from the last 1 or 2 years, bank statements, any kind of identifying documentation such as a driver's license, passport, state issued ID. You'll need to have all of this with you, so when they get ready to do the process of verifying everything, you have it all with you at that first appointment. That way you can get your answer, like I said, within a couple hours, maybe a few days if they have to verify a few things and get a hold of other people. But if you have it all with you when you go the first time, you avoid a lot of issues and make it a simple process. And before you go meet with a lender, check your credit. You are entitled to one credit report annually from each of the 3 services. You can obtain that report from www.annualreport.com. I'll put a link in the description. Errors on your credit report can lead to a higher interest rate, and there are things that you can clear up that you may not even know about that could boost your credit score, lower that rate. With a lower rate, you can either turn that into more house or less payment. Everyone, in my opinion, should check their credit annually to make sure no one's gotten a hold of their information or something that's come up that they don't even know about or might be sitting out there from years ago. My experience in the car business, I was in the finance office, and it would shock me and surprise me that how many people ignored a bill back in their college days or their younger 20s, $50 to a cable company that they just didn't pay because they were mad. Well, that is like an anchor to your credit score. And just by paying that $50 off and getting it erased from your credit can boost your score. So do the annual credit report. Find out what's out there. Look at things that may be affecting it in a negative light. Try to get them repaired. Boost your score. Pay a lower interest rate. Well, wait a minute. I got a pre-qualification letter through the mail that says I'm good for $275,000. Is that not good enough to put an offer in for this home? Well, there's a slight difference between pre-approval and pre-qualification. Pre-qualification is a soft pull on your credit. Basically, these services or these banks get your information from the credit bureaus monthly. They pay for this information. They're basing it off of a credit score. They're basing it off of some information that they can see, but they don't have the whole picture. Pre-approval is a more rigorous process. It does a deep dive into what's going on in your current situation. Cash on hand, job status, credit score. Where a pre-qualification is basically looking at the credit score. So when you look at the two, the pre-approval is a lot more important than the pre-qualification. Well, how long is this pre-approval good for? I don't want to do it today if I'm not moving or buying a home for 6 months. And that's correct. A pre-approval is generally good for 90 days. So if you aren't in the market or aren't serious right now and you just want to kind of get a feel for what's going on in the market, you may not need a pre-approval letter. But if you're planning on purchasing a home, or if chances are you're thinking about, I'm not buying a home for a year, but you may find your dream home tomorrow, getting a pre-approval letter can be a smart decision. Okay, so we're looking to purchase a home. What do we do next? Well, I would get a hold of a mortgage broker, a mortgage lender, or a bank in the area. I've put a link in below to the 12 steps of the purchasing process. I'll also be doing videos in the coming weeks of each of the steps. If you like this content, please consider hitting the subscribe button or the like button.